The Nigerian Labour Congress and the Trade Union Congress have suspended the nationwide strike, which brought various sectors to a standstill. The suspension of the strike is seen as a significant development in the ongoing negotiations between the government and the labour unions. The government has offered to pay above 60,000 naira as the new minimum wage, which the labour unions are meeting to considering and decide the next course of action. Well, let's get more on this. I told you earlier, I'm being joined, and he's live in the studio, the Chief Investment Officer with AfriInvest West Africa, Mr. Robert Omotude. Thank you so much. It's good to have you discuss this topic with us.
Thank you so much. It's nice having you.
Well, let's start with this strike. My question yesterday was, why do we have to always get to this point where NLC will have to down tools, shut down the airports? This time around, the grid was actually brought down. 0 megawatts. Absolutely. That was what happened. And we saw that people could not move and all of that. Now, for me, I'm concerned about the impact on the economy.
Absolutely.
You are an economist.
Yes.
Make us understand what this means.
Well, to answer your first question, we don't have to always get to this point before we do what is right. And, I don't think that anybody, in its, right frame of mind will argue the legitimacy of the agitation of the labor union. I mean, it is clear. Today, if you go by some statistics, even very close to us here, we are at the lowest rung of that, that cadre in terms of where, minimum wage is, especially when you consider it in dollar terms. I mean, countries like Ghana, Angola. In fact, you don't want to talk about Gabon. In some analysis suggested that Gabon is around a 350, naira, 350,000, I mean, okay, on a monthly basis in terms of minimum wage. But the point is, when you have a situation where, year in, year out, inflation keeps mounting, exchange rate keeps depreciating, and we are not tweaking. One variable is constant. Exchange rates depreciating, inflation rising, and minimum wage constant. You always find a situation where to catch up for the many years of doing nothing, you always see this kind of a should I say stand down, where labor union is saying, this is what I want, and the federal government is saying, I'm sorry, I can't afford it. Now, the other leg is to say, is the federal government right to say, I cannot afford it, right? It is also correct from the perspective of the government that the federal government may not be able to afford a 300,000 minimum wage at this time.
They even say 494,000, which according to calculation is 9.5 trillion naira.
So so that's crazy because and like I said, labor is justified. Today, our minimum wage is equivalent in dollar terms, I think, to around $20, approximately $21 at 30,000.
30,000.
I mean, there is no country of the world where anybody can survive on that kind of minimum wage. It's not feasible. And that is minimum wage, the gross. When I say gross, after net of taxes, what hits your account is 30,000. So which means that this person probably takes transport, have other expenses, So the money probably is not able to cover all the expenses, let alone having something to save. So labor has a valid concern. And the federal government also, from their perspective, have some points to marshal as far as this argument is concerned. But I think that, to be very specific, we shouldn't have to get to this point. I even think that the labor, as part of negotiation, should, at this point, be negotiating for a minimum wage that is time reflective. What I mean by that is, you negotiate your minimum wage and you bill in the incremental, the incremental build-up to the minimum wage that you are negotiating. So if you agree with the federal government today, 60,000 plus, 60,000 naira plus, I mean, that, that's going to be the minimum wage. Then you should also have a clause that says every year the minimum wage will go up. That's one you don't need to agitate. It should be automatic.
Should be like a norm.
Yes, like automatic. To say relative to, you can benchmark it to inflation. You say, okay, on a yearly basis, your minimum wage. If you think that you are scared of what the inflation figure may read out, because now we are comfortably in the 30% neighborhood as far as inflation is concerned. So if you are scared of that, even if you say 5% or 10% annual increase, and I think that to determine that rate, you will have to check our long-run inflation. Long-run inflation for Nigeria, you may find it comfortable around maybe between 10 to 15% levels. You always see some anomalies out, here and there. But around the 10 to 15% levels, it should give you the normalized level of inflation. Well, except after COVID, we've not seen a normal level, so to speak. So what I mean by that is that will help us to prevent this kind of situation where the whole economy is shut down because labor union is agitating. Now, if you want to contextualize the impact on the economy,
yes, please.
It's quite huge from the perspective of the man hours that were lost. Yeah. You may say it's effectively 1 day or 1.5 days. You understand? But in terms of the man hour that was lost, the power grid that was shut down, and the consequential implication of that in terms of costs to households, to businesses that are depending on the grid.
Private guys?
And also the private guys. The simple calculation is, what is our annual GDP? Not of 200, trillion naira on an annual basis. Divide that by 365 days, you will get a sense, So what was lost is actually over 1 trillion naira, to that agitation. But that is looking at the economy from the aggregate. Now, the other soft issues to then address is to say labor is agitative because we are in a country where your exchange rate over the last 5 years has not just doubled. It has tripled. You understand? Even more than tripled, to be honest, because I said 5 years. If you look at it, over this time last year, we have an exchange rate that was hovering between 700 and 800, even in the parallel market. This time last year, official window was around 400. So in the parallel market, if you are 700, 800, between last year and this year, we have doubled our exchange rate because we are comfortably in the neighborhood of 1415 as far as the exchange rate is concerned. If I pick it back 2 years ago, we have tripled it in the real sense of it. Because 2 years ago will be 2022. Around this time in 2022, our exchange rate was around 600 naira to the dollar. So between 2022 till date, in 2 years, exchange rate has tripled, in terms of weakness. That is over definitely 200% depreciation in the currency. Now, if you look at inflation, this time last year, what was our inflation level like? Now, what is inflation today? And to be honest with you, if labor succeeds in getting a 300,000 minimum wage, assuming, because I also think that labor will put all those fictitious figures so that when negotiations come in, you can find yourself around.
Yes.
So if labor is really serious about 300,000, it's natural that they will put it at 450 so that maybe negotiations can get us to 300. But to be honest with you, even at 300,000, it's not just bad for the government. It's bad for the private sector. Think about
where do the private sector sit in this?
If you have a driver,
exactly,
your driver's salary
has to more than.
And
I don't think there's any business that will say has made 100% profit.
And that is the realistic part of the argument, which is to say, it's one thing to agitate for you to triple your minimum wage.
Yeah,
but the real economic activities that will generate the flows, are there circumstances where as minimum wage is tripled, my real economic activities will triple. But in some ways, after a while, it catches up. Because if truly you are getting minimum wage at 300,000, first, you see some employers of labor employing people at below minimum wage because they cannot afford it.
Yeah.
And those who will stick to the guns to say, I will pay the minimum wage, they will have to downsize. And in downsizing, what 3 people will do, you will get 1 person to do it. Do you get the point? So it can also lead, it can lead to some level of unemployment that the country which is very tense right now, can really not accommodate at this time. The issues is a compendium of issues to diagnose. But, all of this starts from the failure of government, in not managing our exchange rate appropriately as it should be managed.
So with all of these efforts by the Apex Bank trying to sort the airlines out?
And I'm coming there.
Yes.
The current central bank is trying to solve the problem. You will notice that Dr. Cardoso oftentimes will tell you, we didn't create this problem.
Yes.
We are trying to
solve it.
The truth is that he is trying to solve the problem. So when I say the failure of government, I refer to, government is a continuum.
Yes, of course.
The activities of past government into the current government. Because if we're already on a trajectory to a 2,000 naira exchange rate, even before Mr. Cardoso took over the office.
True.
So whatever he's doing now is trying to solve the problem, right? Whether the short-term fixes we are doing now is now sufficient to solve an already bad situation. We've analyzed in these studios multiple times of several things that we should. Some of the things we advocated for is what Dr. Cardoso and his team is trying to do now, which is why you are seeing a reflective market, for foreign exchange in the official window and the parallel market. You see what I mean? But the problem has been so terrible that even the behavior of consumers is negating some of the efforts of the central bank. For instance, central bank is trying to put a rein on inflation by hiking interest rates. Now, the hike in interest rate is further putting pressure on manufacturers who then have to, borrow funds at a much higher interest rate. If you follow the commercial paper market, you see instruments being issued at a yield of 30%. The question you will ask yourself is, for some of these institutions issuing papers at 30%, what's their net margin like? In fact, I'm going too far by saying net margin. Your operating profit margin. If your operating profit margin is 35% and you are issuing paper at 30%, what it tells me is that your net margin will shrink to 5%. All other things being equal. You see? So the profitability of companies are likely to dwindle because interest rate environment is high. Now, the other detrimental effect is that they are not just hiking interest rates or receiving those high interest rates on the commercial side. Some of them are also passing the cost to the consumers. So if you're able to pass the cost successfully to the consumers, you have also worsened the inflation situation. So, but I think the only argument the central bank that is overriding for the central bank right now is I need to put interest rates high up there so that I can manage liquidity that is speculating on the on the domestic currency. I think that's the overriding objective. Otherwise, I will be saying right now that at the level of interest rate we have now, you are not solving inflation problem, unfortunately, because it's so high. And let's look at another dimension.
Okay.
If you raise interest rate, for instance, government is having to borrow at around 25-26% this year. This time last year, the same government was borrowing at an average of about 10%, even single digits, this time last year. So it means that the borrowing cost of government has also quadrupled from 8% to 25% this year. You see the point? Now, but if inflation is monetary, in its, we say, economists will say inflation is a monetary phenomenon. It means that as you are taking the money out of the system with high interest rates, right, and with, all sort of, instruments or papers that we have in the market, what you are doing essentially is that you take those money out of the system, right, you give it to the government, either by way of treasury bills or bonds.
Yeah.
What does the government do? The government spends because the revenue profile, spending profile of government is increasing on a daily. This minimum wage is going to increase it further. At the minimum, it means that your wage bill is going to double. If you are coming from 30K to 60,000, okay.
That's double already.
That means doubled already.
Yes.
If it's higher, so you have it more.
Yeah, you have it more.
So government is spending more, right? So you are quarantining some liquidity from the system. It gets into the hand of government. Government spends more. Your liquidity level in terms of money supply is the same. And in as much as your money supply level is the same, inflation is going nowhere. Can you see the point?
Yes, I get it.
So because high interest rate is taking you to a level that the government itself, because if you notice, the DMO has remained almost at the same level at every auction. Treasury bills, bonds, they just stay at one level that Central Bank, we are not following you on this matter. We are staying here. Because where they are is already bad. To go higher is to make it worse and make government fiscally unviable. And you can't run an economy like that. So as much as we are trying to solve inflation problem, which is some of the reasons that is bringing up all of this labor agitation, which is legitimate, we as much as possible must try not to get to the point where we now create, additional pressure on the economy that can shut down the entire system. Now, other areas to address is consumer behavior.
That is really important.
Consumer behavior is really important, and we need to strengthen our institutions, especially consumer protection institutions. You go into a supermarket that this time, 2 months ago, you will have bought an item for the sake of this argument. And I have, specific items that I can't mention, right? For the sake of this argument, you will have bought at 1,000 naira.
Yeah.
And then you go to the same store today, and that item is selling for 3,000. There is no inflation that can justify it. There is no exchange rate depreciation that can justify it. Because even between February and now, your exchange rate has even, depreciated times 2. Right? The item should be selling for 2,000 and not 3,000. And you see a lot of that happening. And the more you are hiking interest rate, the more you are giving those ones opportunities to continue to charge arbitrary and rent sick on the entire population. So consumer behavior will not be resolved by high interest rates. And I think those are the aspects that the central bank needs to really guard, very seriously. You are hiking interest rate for all is what? But what it's doing majorly is just helping you to move some liquidity from one aspect of the economy to another aspect. You take liquidity away from the household, you put it in the hand of the government. You take it away from the household sometimes when it's a commercial paper that is issued or a corporate bond, you put it in the hand of the private sector. And the private sector is also investing in the same economy. Money supply is growing. So, and that's why you will see, that this tightening spree started around May 2022.
Yeah.
Till date, we have had that consistent creeping up of inflation since May, more than 2 years. What has changed? I mean, in this new central bank administration, interest rate has gone up by about 600 basis points or more, And what are we seeing? We are still seeing a sticky inflation. And the truth is that whatever we are doing right now, because we have gotten to a level at 30% yield for most of assets, cost of money right now, from the government is coming as high as 25%. What that means is that at that level, you have also created, let me give you another scenario, which most people don't look at. If I issue a treasury bills today at a yield of 25%, in 365 days' time, when that bill is maturing, money supply has grown by 25% by virtue of that single bill that I issued. So, economists will talk about this, but, inflation is actually kicking the can down the road. Most times when inflation moderates, the real price pressure has not disappeared. What has changed is a mathematical computation, so to speak, because, we are coming from a level that is so high. By the time I'm computing inflation this time next year, even with the central bank doing nothing, if there are no additional pressure, inflation will naturally come down on base effect. Do you see my point?
Yeah, I get that point.
So, because tightening is not free. Tightening means that you are creating more liquidity upon maturity of those monies that you are mopping up today. It's tricky, but that's the reality of what is going on.
Looking forward, because this is really worrisome. But looking forward, we need to project and see. We've seen efforts now. We've identified what the central bank is doing. Does it mean that, I don't want to use that word, light at the end of the tunnel? When are we getting off this transition period? When are we going to start to see the positives of that handshake? Many analysts have agreed that it's better than what we used to have, the former administration, the handshake between the fiscal side and the monetary side. So when is this inclusive growth starting to come to fruition?
So the way I look at it is, we said it before. I don't know if you recall, one of the times I was in the studio before the election.
Okay.
I said, I do not envy anybody that wins the election. So it's not an easy journey because we have taken so many stupid decisions in the past. And we are now just trying to do the right thing. We are going to pay for those stupid decisions. That's what's going on. So there are no easy fixes. That's the truth. Bring the best economists. In fact, if you bring an economist that is not so in tune with the domestic development, right? Like bring a Bretton Woods economist to come and solve Nigeria's problem, they'll make it worse. So that's why you have to apply some domestic economic sense.
Is that the orthodox policies?
Yeah, if you go fully orthodox, which is what I think the central bank is trying to do. If you go fully orthodox, the economy it will become worse than we are trying to solve. And that's what I'm saying. And I just gave you an instance.
Yeah, you did.
25%, right? So what about the guy? Because central bank does not have the sole capacity for creating money. It is economic activities that create money. So when central bank is borrowing at 25% yield, now 26% at the homo end, the private sector guys who are coming to the market to borrow, they have to pay higher. So some of them are already paying 30%. Some are paying 35%.
Yes.
So those 35%, they have also added to your money supply upon maturity. That is if they don't default. Because that's another leg. Because the more you are creating that risk, profile for your country, the more difficult it is for these companies to survive. And I gave you an instance. If a country, how many countries in Nigeria are as profitable as 40% at the EBITDA level? That is earning before interest, tax, depreciation, and amortization. There are very few. Because companies are not that efficient because of the cost of doing business in our country. So when you are now taking money at 30%, 35% as a company, and nothing fundamental has changed about your company's story. It means that you are taking that 35% from whatever you have. So a lot of companies will run at a loss. And I'm telling you, we are beginning to see the signs. From the exchange, some reports that were released, of some companies that booked a loss. You are going to see many of that. Because, except the companies that will choose to be prudent and just err on the side of caution without leveraging. But you cannot leverage at the rate of interest rate at this time and don't get, you don't feel a pinch of some of the pressure that is coming from interest. So that's why we are saying that there is a threshold. We have not been here in our modern history. What I mean by our modern, the last time inflation was at this level we are seeing now was probably in the time of the military or just before democracy. In our democracy, if we've ever seen inflation at 30% levels, it was brief. And I would say that in the recent history of market development, we have not seen it before. So what I mean by recent history of market development, where government turns to the capital market for raising funds on bills and bonds, it became revitalized around 2003. Between 2003 we've not seen inflation at this level. So this is a new set of problems we are dealing with. And to be honest with you, at 30% plus inflation, even if NPR is raised to 40%, I am telling you that it's only worsening the situation. Everything has a rule. So when you say inflation goes up, you tighten. There is a rule. There is a limit. Just like there is a limit to which you will tighten, and your tightening is leading to more inflation. And that is what is going on right now. So central bank has its job cut out for
Mr. Robert Omotunde. I know we can go on and on, but I must thank you so much again for bringing insight into this, making us understand this better. He's the Chief Investment Officer with AfriInvest West Africa. Thank you so much. Do enjoy the rest of your day as usual.
And you too.
All right.